is amazing. You're at your goal. I can do that. I'll do that today. I'll do a recap today and how I make a plan before the market opens. And I'll actually share with you it here in the chat room as well. Sorry, in the chat room, in the classroom. If we are done with the reviews, I'll show you how I picked up my stocks and how I actually plan to trade them. Akin, can you send your screenshot in the off-topic chat just so that I don't miss it here between the questions and all the talk here in the main chat? No worries, it's okay. Hello guys in YouTube. And yeah, let's start now, so that if we have some time, I'll go with how I usually plan my trades before the market open. I don't know if you remember, but I told you. Thank you. I really appreciate that. So yeah, B-Tang, let's say what you did right there. You had a catalyst, right? So Momo announced some financial results for the second quarter. I think, wait. Not bad news as far as, actually not that good as well. Anyway. Yeah, not that good. Set up parabolic reversal. Indicators, prices extended from VWAP. Entry, a shooting star at the bottom. Stop placement a little bit below the body. Exited. You wanted to get the VWAP. You got your first partial closer to the 9 moving average. Sold all your position on the 9 moving average in the 1 minute chart. Let's see the 1 minute chart. I see that. Still not a bad entry right there. I'll actually explain this trade right here because it's one of my best trades, but it could be tricky sometimes. Now let's see. So you got 5 to 1 when you wanted to get an 8 to 1. 5 to 1 is also great, right? Now let's take a look at that. Momo today, it gapped down, and it gapped down a lot, right? Around 25% or 30% of the stock's price. In the pre-market, it was holding below VWAP, obviously, right? One pop up, which was a fake breakout, but unfortunately it got squeezed back down. Closed as a shooting star right there. Or a reverse hammer, not shooting star. New 15-minute low. This was actually a perfect open range breakdown or a break of the pre-market low right there. If anyone traded that or caught that, this is really good. I love it when we break of pre-market levels and then we have literally nothing on our ways. So yeah, Momo on a gap down, on it holding below VWAP and it breaking the pre-market low, definitely was a good open range breakdown. Look at the 5-minute chart, guys. Sorry, not the 5-minute chart. First of all, the 1-minute chart. Wicks from the upper side, right? Then you're having sort of a doji, another doji, another doji. This is already 4 minutes. Clearly sitting above the pre-market level, which it was holding before, right? That's it, the pre-market level here. That's the pre-market level right there. You see the 5-minute chart? This is the first 5-minute chart. And this is it trying to hold on above the pre-market level. Then it's making a new 5-minute low, which is a 5-minute opening range breakdown on sort of a descending triangle on the 1-minute chart. So whoever caught Momo to the short side, this was actually a really good short on it. I really hope I'll see someone who shorted this one. Anyway, no worries, OTC. This stock is dropping down. First candle, second candle. I actually can start from there. 1, 2, 3. But I would start usually below VWAP, right? And I would consider this is the first, but no worries. 1, 2, 3, 4, fifth candle or third candle. And this is the part which I like about it. If we didn't have this week right here, guys, and it just immediately made a new 1-minute high right there, I wouldn't really like it to the long side right there. Because it's still not looking like enough extended for me. It is extended, but this is the 5-minute open range breakdown, and we're trying to take a parabolic reversal right after it broke down. Why wouldn't I like it? Because I will not be so positive that it will go all the way to the 9 moving average or to VWAP. And again, why am I not sure about that? Or actually, I'll ask you guys, why is the 9 moving average, and VWAP is a little bit far in this case as a target or as final target. I like the long, but definitely not with the target of VWAP and not with the target of the 9 moving average. Why is that? $17.6 pivot point. Yes, the pre-market low. Right here. So this was a pivot point right here, 1805, right? It's acting as a support right here, and usually stocks after they break out, and in this case we are trading a breakout setup, right? A 5-minute opening range breakout. After it's breaking down, we could expect that the stock will pull back to the previous support, act as a resistance, and continue going lower. So I personally wouldn't have liked to have a target above that. However, with a good entry like this, and the stop loss in this case will be the low of the budgies or a little bit below the wick, this would be a good risk to reward, at least closer to the pre-market level right there. And I see that you build all up there, and that was smart. That you exited most of your position out there and the rest at a new 1-minute low without holding this thing for a bigger run. What I like more about it is the fake breakdown, right? It's forming sort of a reverse ABCD pattern or sort of a bear flag. It's breaking down. Some people are getting short for the next leg down. It's squeezing them, getting them out, which is why you have a bigger pop right there, right? After the fake breakdown, people who shorted it and saw that it's going against them, they'll be stopping out, which will cause it to spike a little bit to the upside. Then it's continuing the drop to the downside. Now let's take a look at this one. This right here, I'm not sure how you could catch it. Can you explain to me why you saw right there? I see that you got it on a new 2-minute high after this candle, and this is the reverse candle. Did you take it mainly on the 2-minute chart? No worries. I actually understood that you were talking about something else. Or maybe I just delivered the information a little bit wrong. Yeah, the 2-minute chart, right? Because on the 1-minute chart, I usually don't like this type of price action because I'm afraid that it will be descending on the 1-minute chart and then break down. This is a reversal candle, and remember that even a hammer at the high of the day is also a reversal candle, which is called a hanging man. This is the opposite of it. I personally don't like these type of setups because I see selling pressure, which is just making me a little bit hesitated about taking it. My win rate on these type of trades is decreasing a little bit, but I see that it worked out for you. It was really extended. I mean, and looking at the 5-minute chart, look at these guys. Even if we don't include those candles, it was like 1, 2, 3, 4, and you caught it at the bottom of the 4th. It was literally so extended. 16 cents, right? Sorry. 16 cents, which is somewhere around, I don't know, 5% of the stock price, a little bit more, 6 or 7%, which was really good. You caught it closer to the bottom, really good stop loss, and that was a good risk to reward you got right there. Yeah, so your entries are amazing. I love it. And those early entries are definitely giving you a good risk to reward. And even if you get stopped out on these type of trades every now and then, you wouldn't lose a lot because you can make it up on other good trades like that. Hello, Gilles Joy. The day was good, and I'll actually share the trades a little bit after we're done here. Thank you, Bitang, for sharing that. And let's see what you did right there. Wait, that was Ivan, right? Now this is looking good. This is looking really decent. Look at these guys. Up until this moment, look at this. These are 3 consecutive candles, right? Would I really like it for a parabolic right here because it's the 3rd consecutive candle? Not really, because it's not so far from the 9 on the 5-minute chart. And yes, stocks usually pull back when they get further from the 9 on the 5, closer to the 9. Not necessarily touching them, but at least just getting closer to them, right? And then bounce. In this case, you might say that yes, if it's getting at least closer to the 9 and the 5, I will be happy. But remember, when by each candle, the 9 is getting closer. And if the 9 is getting closer and the stock is just dropping a little bit closer to the 9 moving average in the 5-minute chart, the risk to reward will not be even a 2-to-1, right? Which is not worth forcing it. But looking at those candles here, now it really got extended, right? This is around 50 cents, I think. Yeah, it's around 50 cents. And that was somewhere around 5 cents stop loss. Looking at this right here, you didn't take it right on the second candle because it was giving you a buying pressure, right? Then it's closing as a red candle, which is showing you selling pressure. Now this candle is the best thing I liked about it. New low, which was your entry, tight stop loss. And how much did you get there? Did you exit all out at 3 hours or 4 hours, Ivan? Because I see this was sort of a range order, right? All out at 3 hours. Yeah, you could have definitely got much more than that. This would have been like 6 hours. But if you are getting 3 to 1 on average on these type of trades and you go all the time for fixed 3 hours, this is good, right? Not related to this trade, but I have a quick question. You have said that parabolic reversals early in the day often do not make it to the 9. In this case, do you require more than 4 hours to the 9-moving average? Not really. It depends on how parabolic they are. And it depends on how many legs they already did to the upper side. If it was just at the moment of the breakout, for example at 9:40 or 9:30, it just made a 5-minute open range breakout and it's just got extended a little bit and then made a new low and it's far from the 9 to 5, I don't really expect it to go to the 9 to 5. This time of the day is not early on the day, it's 11, right? And at 11 o'clock you can even start looking for extreme reversals. If you watch the webinar which I made yesterday, I start looking for extreme reversals which go all the way to view up and below after 11 o'clock. So after 11 they definitely can go to the 9-moving average and below that. I would have definitely taken a partial here. Why is that? According to the webinar, I usually take partials within the 5-minute candle if I don't have a new 5-minute low, right? Once it's making a new 5-minute low, then I could wait for it to get closer to the 9-moving average in the 5-minute chart. So yeah, anyway, I would have taken a partial where you actually took it there. We'll definitely take a look at that. CCL. DHPAC. Let's see what you did there. You traded Tesla and that was a short, right? A short and a stop out. And then a long for a quick scalp. I like the long, but the short, can you guys tell me why this short could have been? Just 2 reasons why it wasn't the best short right here. I know the daily looks decent, right? It's on sort of a downtrend on the daily chart, making lower lows and lower highs. Intraday charts though are not really good. Bullish volume is high, could be a reason. Yeah, another reason. Okay, above view up, one good reason, I like that also. Engulfing candle, yeah, it's not really an engulfing. If it was an engulfing, it would have been good to the short side, right? But there is also something about the stop loss and the target. Yeah, chasing on a downtrend, yes. Already huge drop and it passed view up. Yeah, exactly. It's chasing on a downtrend, the same thing, right? It's already dropped a lot. Not a reversal candle. Like in this case, it already dropped a lot, right? So no need literally for reversal candle. If the entry was short there, I would say yes, there was no reversal candle and it was just a little bit early. And now another thing, guys, the target. Just let's say this thing dropped now, okay? Where do you think it might go before it finds some support? View up. Yeah, it broke view up. Yeah, it could bounce off this moving average, you're right. And another support after that, the day low. Before the day low, another support. Look at the 2-minute chart, it's more clear there. Exactly, the pivot point. You see it's holding here. Yes, it's not a cleared level, but it's also holding here, which is 410. Basically, first of all, the stock already did a huge drop with no pullbacks, right? And the entry is late, and I know why you waited right there. I think you wanted it to just go below view up. You didn't want to short it above view up because it might bounce out of view up and continue against you. So I like your plan. You were patient and you waited for it to break view up and to break the moving average. But now look at this. You're taking it to the short side here. What would be your stop loss? see, looking at your stop loss, you put it above view up, right? But I wouldn't really like view up as stop loss in this case. Why is that? It wasn't respected here, it wasn't respected here, it's not respected here. So view up is not the best technical level to play around. It's just not respecting view up, right? In this case, I would have my stop loss at two possible levels. One, the pivot point, which is right there. Oh, sorry about that. Again about the mouse, yeah. So again, it wasn't respected here, view up, not here and not here. So it's not acting as support and it's not acting as resistance, right guys? In this case, if you short it here, you could have two possible stop losses. One, the pivot point here, which is not the best, or the high of the day, which is the best in this case, because this is the level which the stock actually bounced from. Now looking at the risk to reward, this is your stop loss and you're going into the face of one support right here, which it could bounce from, or second support right here, which it could bounce from, and this support, which is the low of the day and the low of the pre-market, will give you only a 1-to-1 move, right? So the risk to reward isn't in your favor right here, and the stop loss is just a little bit wide with no pullbacks. And the last thing, the moving average. The moving average, yes, it wasn't that respected right there, so I wouldn't really pay attention to it, but this is a horizontal actually moving average, which now started getting there, right? And since it's a moving average, it could bounce closer to it, from it, or below it. And we want to make sure that none of this is going to happen. What would have been a better entry to the short side, guys? A better entry to the short side is seeing a stock pulling back, making a lower high, breaking down, making a lower low. This would have been a perfect entry. First of all, you will not be chasing a stock because you waited for a pullback. And guys, I'm not saying that this trade is bad. I'm going to share with you, like right now, a bad trade I made on Crowd, and I did the same mistake, which was done right here. It's normal when that happens, but we need to realize that what we're doing is wrong, and we need to do it less often. Because I did the same mistake on another stock, and I'm going to share that with you now. Now, this trade is good. Why do I like this trade? I know that it's extended from the non-moving average on the 5-minute chart. It's extended. It made a huge move right there. But this is a good, quick scalp setup, right? You're having the high of the day right here. And it's obvious that if it's breaking the high of the day, look at this. The highs of the pre-markets right here. It will have nothing above it all the way to 430, which is around $5 move. In this case, if I take it to the long side, my stop loss will be determined by two factors. Do I want to hold it for a huge trend trade, or I want to scalp it? If I want to hold it for a huge trend trade, my stop loss would be somewhere here or somewhere here, and I would be happy to see it pulling back, respecting the pivot points, and then I would add to my position at the next break. If I want to just go for a quick scalp, I would buy it at the breakout. I would put my stop loss at a new 1-minute low and then start scalping all the way up right there. So this trade was totally fine and I actually like it. I mean, is there a distinction between pivot point and support and resistance? Not really. I mean, it's just basically the same eventually. I mean, in my opinion. Now, let me show you the stupid trade I did in Crowd, okay? So this is me doing the same mistakes. Look at this. Do you see the pre-market, guys? We're having a level right here and we're having a clear level right here, right? And I have a daily level 134, 47. I don't know where I got it from. Let me see where I got that from. I think I got it from the 15-minute chart. Yeah, I bet it's from the 15-minute chart. Yeah, that's it. You see, guys, clear support on the 15-minute chart, 134.47. So basically a lot of levels, a few cents above my entry. It could bounce out of any of them. And it also already did a decent move right there. Around, I don't know, $4 or $5 move with no pullbacks. What am I doing? I'm going to the long side, right into the face of resistance. It didn't even go in my favor a little bit. It wasn't even a breakout setup. And this is the second mistake, guys. Remember what I told you? If you are getting into the long side inside the range, your stop loss should be what? The low of the range, or the level the stock actually bounced from the last. So these should have been my stop loss. And then once I confirm that it's actually bouncing off another level, I could move my stop loss to the new technical level, right? I got inside the range, which was number 1. I put my stop loss within the 1-minute candle, when it still was inside the range, right? And that's why I just get stopped out and I lost in this trade. Similar mistake to what you did right there, but I just wanted to share with you that we all do that, but we need to realize that if you can control the FOMO, try to control it, and it's better than losing 1R on a trade which wasn't really necessarily to be taken, especially that you know that you will have another opportunity. Is one good opportunity here, another opportunity on an ABCD pattern, right? Basically you will have a lot of opportunities no matter what stock you are trading. And if not on this stock, you'll find another stock. Okay, now let's see what Handsome did. So Handsome traded NIO to the short side. I saw this one coming, but my greed on NIO didn't let me exit. So I was, no, it wasn't actually NIO, it was in CCL, so sorry about that. Yeah, it was CCL, I wasn't actually watching NIO today. Anyway, looking at NIO, high of the pre-market right here, right? High of the resistance right here, the previous resistance intraday. Once it's breaking it, it wouldn't have been a bad long actually with the stop loss right here, having only one resistance above your head right there. You can't just get into a trade with no resistance ahead. And I would be okay with going at least against one resistance. Against 2 or 3, that's too much. And that was my mistake on crowd. Anyway, this is decent right here for a long. Then it's going up and it's starting to make a new 1 minute low. I'm not sure how the 5-minute chart looked like. Unfortunately, it would have been way better if I could see also the 5-minute chart, but let's say the 5-minute chart looked good. And now it's making a new 1 minute low after sort of a breakout. You're taking it to the short side, adding on a new 1 minute low, partials. I wouldn't, and look at these guys. This is what I told you about. This is one of the exceptions which I made on my rules when I'm trading parabolic reversals. So if I take it to the short side and I take the partial on the first minute after I'm getting my trade in, after I'm getting into my trade, and then it goes to my break even, I'm not moving my stop loss to break even. I'm respecting my original stop loss, which was there before I took the trade. Why is that? Simply because we know how the candles are being traded. It could go all the way up and then squeeze back down. So if I take a partial right here, and then it does this and gets me stopped out and then goes down, I will totally regret it. So in this case, I'm not moving my stop loss to break even. I would move it to break even after it's making a new low. Let's say we don't have this wick here. Let's say this wick is not there, because even in this candle right here, yeah, let's say this wick is not there. Let's just say the candle looks like this. Okay, now the next candle opens and it makes a new 1 minute high and coming back to your break even. On this candle, I'll exit the break even. On the very next candle or on the same candle, I will not exit the break even. Does that make sense? Another advice, I'm not sure how much you partial right there. Just make sure you take small, not small partials, take your first partial on parabolic reversals at least at 2 hours move, right? At least. I prefer 3 hours on parabolic reversals, but at least 2 hours move so that you don't miss the move. Because if you are on a good reversal, then they would make good moves. 10%, that's not bad actually, because you will be able to partial all the way down and you will catch really good moves on it. Mick, let's see what you traded. Yeah, 10% is fine. I personally take 20 to 30% partials. Like my least partial key is 20%. I do take 30% most of the time at 3 hours to lock in 1 hour. But yeah, that trade was decent. It was good. Oh, wait, there was another trade in NIO and I missed it. Okay, apologize, thank you. So there is another trade here I missed actually, and this is also good, guys. This is a good short. Why is that? Look at this. At the beginning it was making a low, a high, a low. Let's say this is a high, so basically it's uptrending, right? After that, look what's happening right now. It's making a new high, a low. Now this low is still good. This low is still showing us strength, right? It's still a higher low, but we're having a lower high, which is showing us some sort of weakness from the upper side. Now this is the first moment where it's making also lower low. So basically the trend started to change. Now it's making lower lows and lower highs. Would I really like it to the long side? Not really. I wouldn't like it to the long side unless I see it's making a new high and a new low, which are going to the upper side. If I don't see that, I'm definitely not long biased on those. So look at this. Then it's holding the high. It's holding the low. It's holding the high. It's holding the low. Basically right here, this is the consolidation area and you are not sure where it's going to go, right? It could break either to the upper side or to the lower side. Now, if you take it to the long side on this candle and get stopped out here, that would be fine. Why is that? Because it held the support, it held the resistance, and now it's breaking up above this pivot point, and the next pivot point you have is somewhere up here, and if it's breaking it, it will be able to run. So if you got caught in this fake breakout right here, there is nothing you could do about it. It just was a decent setup, but it didn't work out really well, depending on how the 5-minute chart looks like. If you have selling pressures on the 5-minute chart weeks, then definitely you would want to avoid it. But if the 5-minute chart also looked good, and you had this on the 1-minute chart, it's totally fine to get caught in this thing long and then get stopped out. He didn't take it to the long side, but the short was good. Why is that? Fake breakout. After the stock is breaking out, what do we want to see? We want to see it either shooting up or shooting up, pulling back, finding some resistance, and continuing to go up where you could actually add to your position or re-enter. If it's breaking up and then immediately goes down, this is not a good sign. It's not strong, and that's what Hansen did. He played this fake breakout to the short side with the tight stop loss and caught a really good move right there. Added more at the break of the support, and this is what we wanted to see here, guys. Once it's breaking, we want to see it going lower. Where? To the next pivot point. It has, right? Now, a lot of partials right there. Remember, try to just implement those pivot points in your targets, or just hold on till it gives you the good risk to reward, right? So basically here, if it breaks this, we would definitely have wanted it to go all the way to the next pivot point. It didn't do that, which showed us weakness, and here it did what we wanted it to do to the long side. It's breaking this point right here, and then it's going to the next pivot point and bouncing out of it. Now this is where we are patient. We don't take it to the long side here, because we want to make sure what's going to happen. Maybe it will pull back to this pivot point, find some sort of resistance right there, drop down where you could actually short it, break down where you could add, and go for a target of the next level right there. Now Mick traded the SPY. So that was a long right there at 11.20. Not bad actually. Look at this. You see it here, you're having a daily level, which is one thing, and that's really good. You're having a daily level on your way. You're having climactic volume at the low of the day. First, a candle with a bigger selling pressure, then a candle with a bigger buying pressure with a new 1-minute high. This is an A+ setup actually. You're taking it to the long side, putting your stop loss somewhere down there, partialing, adding at the break of the point right here, but it's getting you stopped out, unfortunately. So yeah, look at this. Now, would I have added right here? Yes, I would have. Would I have put my stop loss down here or below this hammer? Not really. I would have put my stop loss a little bit lower, closer to those levels right there. Why is that? Because there was still no pullback. For me, I just want to see a pullback, and my stop loss will be the moment of the pullback. If there is no pullback and there is only sideways consolidation before each breakout, I don't consider this as my stop loss. Oh, it was your break even. Okay, I see that. It was your break even after the ad. Okay, no worries then. You managed it well. Then after the pullback, you see guys what it's doing? It's breaking this level right here, but getting both back up, which is showing a sort of strength. You take it to the long side of the break of this point, starting to take partials at the break, at the 50 moving average. That's smart, because a lot of times they bounce off the 50 moving average, and then at a double top right there, just as a precaution. And that's smart. Look at these guys. He didn't take partial right here, right? But he took it here. Why is that? Because first, there was no resistance here, and there is no resistance above, so it could just simply run. Now that after it dropped, we have a new potential resistance level, which is here, and that's why he took a partial, which was smart, leaving some of his position for the break of this pivot point right there, exiting all out right there, and then it dumps. I like how you managed this one. Yeah, this was really well managed. Yeah, thank you. Let's see what Dardan did right there. Aggressive stop loss at 138.39. The top of the week of the second to last green candle. I know most people would have used the top of the previous candle at 138.82, but it failed the breakdown on the previous high day, and you felt like it was a loss anyway. Was that reasonable? So let's see what you did right there on crowd. Okay. This is not bad. Looking at the crowd on the 30-minute chart, it's made a new 30-minute high, right? On the 5-minute chart, you're having a double top, but you're having a strong resistance above you. 2-minute chart, same thing, double top with a fake breakout right there. After the breakout, it just didn't continue going higher. New 1-minute low, right? And this is decent. It also did 1, 2, 3 moves with no pullbacks, and the next pivot point on your way, which could just act as sort of resistance, is down here and down here, right? So basically it will give you the risk to reward you want to get right there. Now regarding the stop loss, I would have had my stop loss at the high of this candle. I'm not sure how much is that. I see that you had it even earlier within the 1-minute candle, right? I personally don't love putting my stop losses within the 1-minute candles, and I told you why. It could just go a little bit to the upside, not make a new 1-minute high, and then squeeze back down. I just don't want to get caught in this occasion, in this type of positions, and then see it dumping so fast that I also miss my entry. So I get subbed out for a small loss, or not small loss, it will be 1 hour loss 100%, because I'm always in full position. And then see that it's going without me, without giving me the entry, and missing a 4-hour move. So instead of having 4-hour, I'll be down 1 hour, and I'll not be able to re-enter because my risk to reward is messed up. But the entry was amazing. A little bit early partial, good partial, right? Another good partial. Another good partial at the 50 moving average, right? I'm not sure what this level is. Let's say it's view up. Another, I doubt this is view up. I think this is view up actually, right? Anyway, yeah, exactly, this is view up. Anyway, this is the 200, it must be the 200 then. So yeah, not a bad partial right there. Those partials I would have avoided. I would have taken a partial down here, then a partial down here at view up, and I guess that was your last partial. But yeah, the move itself, it was good. The entry was amazing. The setup was good. Double top on the 5-minute chart with a strong resistance ahead. So yeah, you managed this one amazingly well. Good job there, Dan. Let's see what you did. Cows, and then we have Akin. Actually, not that. Yeah, that was supposed to be done. Thank you for sharing your trade. So Cows traded Tesla, and let's see what you did. This is decent one. I like this one actually. So looking at Tesla on the daily chart, I honestly would be a little bit cautious and careful about trading this one. I will be both long and short biased, which is not bad actually, because I'll be able to trade the price action. If the price action is telling me that the stock is strong, I would trade it to the long side. If the price action will tell me that the stock is weak, I would trade it to the short side. Why would I be a little bit long biased in it? I'll be a little bit long biased in it because we're sitting around the 20 moving average on the 5-minute chart, on the daily chart, and we're sitting at yesterday's low level. Why would I be short biased in it? I'd be short biased on it because it dropped for 2 days, right? And today it's making a lower high daily level or opening price. So yeah, based short buys and long buys. Now let's see let's take a look at the 15-minute chart. On the 15-minute chart, we're having a level right here. We're having a new 15-minute high, which is breaking this level. This is good on the 15-minute chart to the long side, definitely. On the 5-minute chart, you're having sort of an ABCD pattern with a new 5-minute high. What would be our stop loss? We can't determine where to put our stop loss based on the 15-minute chart, but it's obvious that on the 5-minute chart, we could have our stop loss either at this wick right there or at that wick right there. Taking partial at the highs right there, which is smart. Another partial once it's getting closer to the daily level. I would have taken another partial at the daily level right there. But I see that you missed that one, and after it bounced and went lower, you just decided to exit on it, right? But yeah, really good trade to the long side, and it was also a good trade to the short side. If you catch it after that, somewhere around here on a new 15-minute low, it would also be a good trade to the short side. Why is that? Because the daily is also looking weak at that moment. You're having strong resistance area above you on the 5 and the 15-minute chart. It's respecting it. It did a double top with the second top higher than the first one. It's a little bit of a fake breakout. It did break out, but it didn't continue the uptrend. It got down into the range, right? That's it. Only this breakout. It's really weak. Previous resistance didn't act as support, and it's making a new 5-minute low, new 15-minute low below resistance area. So yeah, short would have been also great in this case. Can you tell us what all the daily levels are? Which daily levels should be used every chart? Okay, I think we'll have some time once I'm done with the trades, and I will talk about the levels which I actually pay attention to. Actually, I'm not sure if we'll have time, but I think we'll have some time. If not, I'll do that on my recap today, okay? I need to actually take some notes so that I don't forget. So let's see what you did right there. Traded RKT to the long side. How did you catch this entry right there? Actually, I see on the 15-minute chart, fake breakdown and the squeeze back up, which was your entry on the 15-minute chart. Daily level, increasing volume on the 2-minute chart, right? I don't see the 1-minute chart, unfortunately, but yeah, these are enough indicators. Remember, guys, what we said? Sometimes you could get an entry without even having a new 1-minute high in parabolic reversals if you have at least 4 criteria met, right? So you are having a daily level, you are having a fake breakdown, you're having a stock which is extended from the 9-moving average on the 5-minute chart. It's going down, coming back up, you are taken to the long side. If there was a huge bid, that would have made it A+, but I'm not sure what was there. You are adding to your position on the way up and then partialing. This is a new 15-minute high. Once I see that new 15-minute high, I would personally hold it to that pivot point. I wouldn't take a partial right here. But I see with your early entry, this definitely was a huge move right there. 1-minute chart is top right. Okay, I see that. There was a wall at 60, right? 26. Okay, that's good. I see that now. Yeah, now that's good. Yeah, this entry is amazing. Like how to catch a dip, right? It would have been like only few cents stop, and without taking any partials, adding to the position, you could even triple, quadruple it, or even add 5 times bigger than your position, and your stop loss will still be below break even. So yeah, this could have been, I don't know, 20-hour trade. So the entry was small and then you added big. Yeah, I would normally I always enter with a fixed R, just hoping to get good reward if it works out. But still, that was actually amazing. I love it. Let's see. How much did you get after all on this trade? How many hours? Yeah, UHC. So Sam, let's see what you did there. Yeah, take your time. So Sam traded NIO, got 1 point, yeah, got almost 1/4 risk to reward on this one. This was a parabolic reversal. It did 1, 2, 3 consecutive candles, sort of extended from the 9 moving average in the 5-minute chart. Daily level on the way, nothing on the volume, which is not bad, right? Good reversal candle right there. New 1-minute low, stop loss around that wick right there, and then partialing all the way down. One thing which I don't like here, the horizontal moving average on the way, and I wouldn't short it unless that horizontal moving average is my target. And I see that you actually took a partial at that moving average, which was smart. Then it broke it, you're taking another partial at the moving average. I wouldn't have taken it on a new 1-minute high because it could just make a reverse ABCD pattern, right? It's normal to have new highs on the way down. This is a good partial at the 9 moving average in the 5-minute chart, and this is a good exit after it bounced from the 9 moving average in the 5-minute chart and made a new 1-minute high. All of the partials are good. This one was extra, but one extra partial doesn't harm, right? Yeah, guys, I'll get back to them. I'll try to review one trade for everyone, okay? Or wait, or was it on the same? Ah, no, it wasn't the same. Yeah, I tried to review one trade for everyone just to save time. Once I'm done with that, I'll get back to the rest of the trades, okay? Thank you. So James traded INTC. Yeah, and we'll have time. I'll get back to the second trades for which you sent, guys. So let's see what you did with INTC right there. INTC is good. I like that you entered on the pullback. You didn't get in chasing right there. So first of all, it squeezed below VWAP. Below VWAP, it held some sort of support. Fake breakdown here. Getting back into the range. I wouldn't take it to the long side here. It's not that far from horizontal moving average, then VWAP, then the 9 moving average in the 5-minute chart. Basically, a lot of resistance is ahead. So I would just avoid taking it to the long side here. And I would wait for it to break this level right here. This level right here. Once it's breaking it, it's getting better. You could either chase it and enter right there and have your stop loss at the low of the wave. Or even better, wait for it to break, pull back, find a new support, come back up, enter, stop loss the low of the week, and then partial on the way up, which you actually did. So this was perfect. You played it amazingly well. And that was a really nice patience right there. Exiting the rest closer to break even at a double top. I would have exited here. We're having a double top with a fake breakout and then a new low. If this was only 10% left or 15% and you wanted to respect it to break even, then that's fine. I'm sorry. If you had still 30% of your position left or a big portion of your position left, I would just exit most of it right here and hold the rest to break even. Yeah, it was 25%. Yeah, I would have still partial. 25 is not too little, right? Again, I did review one of yours, but there is another one, I think. And I'll get back to it. Let me check if I actually... Wait, or I did miss both of yours. Yeah, I did miss both of yours, actually. My bad. I'll get back to your trades right now. Let me check it. I'm sorry. Yeah, I see that. So let's see. This is the Akins trade right here. And actually, you had the same trade I did, I think, on CCL. Yes, the same trade with the same ads. Wait, this is... Let me actually share my trade on CCL. I want to just show you both of those trades. CCL. Just let me get that here. And look at these guys. Getting in the entry. I actually get my entry on the first candle. You get it in the second candle for 1 minute open range breakout. Then I'm adding on this hammer. You're adding after that hammer. And I'm adding on this candle here. You are adding one candle after it. Just look at this. All of them almost the same, right? I see you exit right here when there was like literally no reason, right? But yeah, that's actually interesting. I'll go through both of the trades now since we have them. Anyway, this was a 1 minute open range breakout, guys, and I like this 1 minute open range breakout. We don't have previous data, but I'll share with you why I like it. It was a 1 minute open range breakout, and it was also breaking the pre-market high. And no reason to exit. Remember how the candles are being traded? Like, they could go all the way lower, not forming a new 1 minute low, and come back up. The next thing, I bet your stop loss would have been at least half of the 1 minute candle, right? So just respect the technical stop loss. ABCD pattern with a 5 minute open range breakout. A plus, ABCD 5 minute open range breakout above the pre-market high. Getting in your entry, selling there. Adding to your position on a consolidation, which is smart. After you added, your average was still above there. Sort of small fake breakdown down here. And then it's coming back up and you're taking partials all the way up, which was good. I see you added one more time here. This I definitely wouldn't have done. Why is that? Fake breakout. Didn't run after it breakout, and that was a breakout on the 5 minute chart. And if there is a breakout on the 5 minute chart, I want it to run, right? So this is a fake breakout. It's getting back into the range. So we had sort of a high, having a new high, which is a double top, right? And now it's making a new low. It's still higher lows. I know that from the upper side, it's still weak. Then it's making a lower high, and definitely I would have exited break even down here if I took this trade there. But these trades, they were amazing. Let me show you the same trade here. Look at this. What do we have, guys? Pre-market high. This is like A plus setups for me. I love them. I love those open range breakouts and trend trades. Gapped up. The only level above it, below 1901, is the pre-market high. And I don't even wait for 1 minute open range breakout to take those trades. I just take them in the first minute if I see that the setup is good. I take it to the long side, stop loss at a new 1 minute low. It's breaking up. I'm taking a partial at 2 to 1. And it's going up, pulling back, making an ABCD pattern. Now look at this. Now we're having a 5 minute open range breakout. Let me zoom it in. Now we're having a 5 minute open range breakout with an ABCD pattern on the 1 minute chart. A little bit of an early entry, but still not bad. Moving my stop loss slightly below or above the wick, which is around view up. Taking partial on the way ups. Then I see that it's starting to consolidate right here. Made a breakout. This is a fake breakout, which made me a little bit nervous. You see here, it broke out, but it didn't run, and I didn't like that. But I just decided to hold on to it, since my stop loss was somewhere at around 18.10 maybe after the ad. I'm not really sure where was my stop loss or my average. No, definitely not 18.10 since this was an ad. It was a little bit even lower than that. So I didn't trigger my stop loss, came back up, broke up. I took biggest partial above 18.50 because we had a huge ask right there, and Andrew actually took this trade because of the huge ask. Big partial right there, and now this is where I'm being stupid. I see that there is a reversal candle. It's just struggling a little bit. That reversal candle on the 1 minute chart, it's struggling a little bit. The breakout on the 5 minute chart wasn't really good, right? It's only like a few pennies up there, and then it's just starting to drop down. Should have just exited all maybe right there, but I didn't do that. And what happened after that? It just got me stopped out at my average. Yeah, that wasn't my no, it was my average after the last idea. That's why I exited. What did it do after that? Yeah, no reason actually. I would have been stopped out eventually anyway. So let's see this trade on RKT. Hamza. Skip the first 2 peaks. Okay, I'll do that. Let's see your trade here. So RKT, this is a good one. I like it. This is also one of my favorite setups, right? You are breaking a pre-market level, and you are also breaking a 200 moving average right there. Taking it to the long side at the breakout. No need to have the low of the wave as your stop loss. Have it at a new 1 minute low because this is a breakout setup. I would have held it here and I would have been stopped out eventually. Why is that? Because I'm having a bearish engulfing sandwich. A bearish engulfing sandwich is a bullish setup. It's breaking out. On the 5 minute chart, there is nothing above me, right? So basically, I would have held on to it and I would have been stopped out at my stop loss. I see that this was actually your stop loss this as well, right? But you took an early partial, which was smart, which worked out for you this time. And then it got you stopped out. I might have re-entered there. Same thing, it's holding this level and now it's breaking it. Entry there, this level would concern me. I would add at the break of this level, partial at the daily level, exit the rest at break even. Would I enter right here? Not really, because the breakout is not really strong. It's just coming back down after the breakout. Can you put your analysis of your today's CCL trade in the Twitter? I would like to study it later. Yeah, I'll post my CCL trade on Twitter with all the notes. And I'll also do a recap on YouTube. So yeah, guys, do you want me to review the rest of the trades, or you want me to explain how I pick up the trades, the stocks for my trading, since we have 10 minutes? So you can choose and I'll do any. Watchlist, Tony? Anyone else? Should I go through how I pick up the stocks for my trades and how I plan them? Okay, alright. Okay, I'll do that. So the first thing when I'm going through in the morning is, let me get my dash opened. I have it, okay. So the first thing which I'm going through when I'm watching or picking stocks to watch is the daily chart. This is the most important thing for me. And why do I like the daily chart? I like the daily chart to be looking good because I know that there are also swing traders who are trading or basing their swing analysis based on the daily chart. If I am also on the same direction with those people who are swing trading, the probability of my intraday movement to work out is more than just a random stock which had some news which is looking ugly on the daily chart. So me and the swing traders who are getting with heavier positions is the thing which I want to see the first. Looking at CCL, looking good on the daily chart. ABC, let me get a big pen because I know you can't see my mouse. Looking at CCL, ABCD pattern, pivot point right here. Today it's gapping up above it. Looking at the pre-market price action of CCL, this is the second thing I'm doing. Look at the pre-market price action. I want to draw some supports and resistances from the pre-market. Now, would I want to trade this thing to the short side or to the long side? If I want to go with the direction of the people who are swing trading, I know they will not take it to the short side once it's breaking up. They will be interested in longing it. So I am interested only in longing CCL. I don't care about this move here. And if I miss it, even if it goes like down to hell, I don't care about that. It just didn't work out today, right? My plan is to trade this thing to the long side based on the daily chart. I want the pre-market not to be like so extended, making $2 or $3 to the upper side. If it's making most of the move in the pre-market, then I think those people who wanted to swing trade it definitely just took their positions somewhere in the pre-market, and now they'll just be holding it and or maybe taking profits intraday. And if they take profits intraday and selling their positions, the price will be dropping, right? So that's not what I want to do. I want stock not to make a huge move in the pre-market. And finally, I want it to be close to view up after the market open. Once it's breaking up, I will just be getting in because now I have literally no resistance above me. Even if it's the first minute, I don't care about that. Sometimes I tell myself I'll wait for 5 minutes, I'll wait for 2 minutes, but now I notice those rules, they don't really matter. I don't need to wait for 1 minute, for 5 minutes, or for 10 minutes. I need... I just need the stock to be clear on that exact moment where I'm taking the trade. On CCL, it got clear for me on the first minute and it wasn't extended. It already did the pullback for me in the pre-market. So it did the ABCD pattern in the pre-market. And this is the first 1 minute breakout. This is the first new 5 minute breakout, right? This is perfect. Nothing to regret about this trade. Another stock I watched today was Crowd. Crowd, looking at the daily chart, I could be either long biased or short biased, but I'm a little bit more long biased on this thing. Why is that? Just zooming out this chart, I see that we're having a resistance right here. It broke that resistance, it moved a lot, and when the stock is moving a lot, what it could do, like similar to the 5 minute chart if you are trading uptrends, it will pull back to the 9 moving average in the 5 minute chart and then continue the trend, or it will pull back to the previous resistance band outfit and then continue the uptrend. So maybe people would be starting to take it to the long side right there. Would they short it? They could, but I like it more to the long side. Okay. Now analyzing the pre-market price action. The pre-market price action in this case, it was tricky. I didn't like it so much because it was just not so clear. I have the pre-market high here, I have the pre-market low here, and I have a lot of levels above me. The next thing which I did wrong right here, if you just compare this thing to CCL, I took it to the long side just a little bit late, right? You're having this 5-minute candle, then you're having the break of the pre-market. It just already did a huge move right there. It wasn't as clear as CCL, and I shouldn't have taken it for 1 minute open range breakout. For 15-minute open range breakout, yes, it would have been good. For 5-minute open range breakout, yes, it would have been good. For 1 minute open range breakout, it wasn't good. This was a FOMO trade. It was a bad trade. I'm taking it to the long side after the break of the pre-market, just getting me stopped out on the same candle. Now, looking at the 1 minute chart, it's going up, pulling back, coming back up. ABCD pattern on the 1 minute chart with a 5-minute open range breakout, that's good. Or maybe later, where here it's actually getting cooler. W shape, right? Up, pulling back, W shape. I take it to the long side for an ABCD pattern and partially closer to the high of the day, just in case it makes a double top. So was I short buys on it? Not so much. I was more long buys on it, and that's the setup which I was waiting for. Took it to the long side, it got me stopped out, continued watching it, and then it came back up. NIO, here, am I long buys or short buys on it? Not any. Now it's just going in a range, and I think that people will be interested in this thing to short it or to long it once it's getting out of this range. So will I really trade it today? I just put it on my backup watch list. If it goes above $21 today, if it went above 21 or at least $20, so that it has room to 21, I might have traded it to the long side. But other than that, I wasn't really interested in taking it to any direction. And you could see even the intraday chart. It is as choppy as the daily chart, right? I mean, here it looks actually better for the short, but no really clear trend for me. I mean, looking at these candles, they are not really clear, so that's why I just don't like it so much. Let me see another stock I was watching today. I was watching this one, and this one I wanted to trade it to the long side. Was it good to the long side? On the daily chart, it's good. It's wrong for me. Would swing traders be interested in this thing? Not really. I doubt anyone who is swing trading will be getting into a position somewhere up there. Would it be good for a quick momentum play? Yes, it would be, because it will be breaking the $10 or maybe the $9.50 if it's breaking the pre-market high. Pre-market high was good up until this moment. Looking at the pre-market right here, I told myself maybe if it goes up, pulls back, breaks the pre-market high, it would be decent. The next candle, it's dumping. Pre-market is just starting to get choppy. On the next candle, it's getting up. So yes, definitely not taking it to the long side. I was watching it for a potential play later, but it just wasn't as clear as I wanted it to be for me. NVAX yesterday was good. Yesterday I watched it. Today I wasn't. Why is that? And just based on what I told you guys, if you look yesterday, NVAX is dropping down. Maybe swing traders will be interested in shorting this thing. Why is that? It's sitting at flat support. This is the only pivot point we have. If we're breaking this one, it's going to this level. If it's breaking this level, it will just dump all the way lower. That didn't happen, unfortunately, and today it actually gapped up, which is why today it wasn't really interesting for me. But yesterday, when I was watching it, I liked it. Let's get back to yesterday. For a short, right there. Look at this one. Let's get back on the 1 minute chart and I'll show you how good the 1 minute chart was. Look at the pre-market level. Do I like this pre-market? Yes, it's volumeless. There is no volume at all, but I like it. The only thing I have between the break of the pre-market low and lower is that wick down there and then nothing below. So the first 1 minute candle, it's squeezing up. Do I like it to the long side for 1 minute open range breakout? Not really. The daily chart is looking weak for me. I think that swing traders might be interested in shorting this thing. And long play is not on my playbook for this stock. It's only short and I would be waiting for it to give me a short setup. Next candle engulfing, good. Next candle, bearish candle, which is getting pushed back down. I like that. Weak candle, perfect. Breaking the point, taking it to the short side, making a reverse ABCD pattern. Reverse ABCD pattern along with a 5 minute open range breakdown. Add to your position, go all the way down until it gets just parabolic like this. Start taking your partials or on a new 1 minute high. I honestly expected it to run even more to the downside because now it has literally nothing below it. Unfortunately, that didn't happen, and you can't just guess it right every time, right? You see this level, it actually bounced out of this level, daily level there. I didn't see that right there. Anyway, that would have been your target. Like if you just mark that daily level right there, it could have been your target. It's just, as Andrew says, those levels are magic, right? But yeah, anyway, that's in short how I just pick up my watch list. What's a good pre-market price action for me? The good pre-market price action is a tight pre-market price action along with the daily chart at the breakout area. Because the break of the pre-market price action means a break out of the daily area, and I know that not only intraday traders will get into this thing, also traders who are watching the daily chart will be getting into this thing, causing this stock to move. Do you guys have any questions? Thank you, Tony. Alright guys, if you don't have any questions, have a good day, trade safe, I'll be in the chat room, and yeah, talk to you later everyone, bye bye. Guys on YouTube, if you have any questions, feel free to email me, ayman@beerbulltraders.com. I'm always happy to help, and have a good day everyone.